Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be your daily cryptocurrency market update, and for those of you that are new around here, you may want to smash that subscribe button because we release one of these videos every single day to help you guys stay up to date with where the cryptocurrency market is at and where it may be going. And right now, we have a structure that we're looking to play out that essentially is going to take Bitcoin and the cryptocurrency market to the upside. We took a non-bearish approach after being bearish for 2022 at the start of the year, and it served us very well thus far. And we are indeed expecting continuation until we get invalidated. There's always two sides to a coin and two sides to a trade, and we try and understand them both and come up with the best or the most probable outcome of playing out. And I do believe that is further upside for the cryptocurrency market. So we're going to do a number of things in this video. Of course, we're going to be looking at Bitcoin. We're going to be looking at the week ahead and what's to come. You know, bringing up the stock market, bringing up the dollar, and really the dollar and the yields are what we're looking to turn to the downside. Because really since the start of February, there's been this kind of macro dampening backdrop on the cryptocurrency market. We've seen yields climb, we've seen sticky inflation, we've seen the dollar climb, and we've seen stocks fall. And this is all based on implied interest rates going up. That's why we've seen yields climb. That's why we've seen the dollar climb. And this, of course, had a downdraft on the risk markets. Things like gold, anything really other than fiat and treasury bonds. Now, essentially, we're looking for a turn in that. And that turn is going to likely complete this right shoulder. And then we're going to see that continuation up. So we will be covering all this. We're going to be looking at a number of really interesting things taking place. The G20 summit is currently taking place right now. And there's been lots of talk about crypto. We also had some news from Yellen talking about strong regulatory framework. And we think regulations are actually a good thing for the industry. There will be casualties, but ultimately it's what's going to propel it into the sort of real world, if you will. Crypto still exists in this kind of unregulated kind of gray area. And once it kind of moves into, or once it gets established and regulated, this is when we're going to see tens, you know, potentially one day hundreds of trillions onboarded into the crypto space. So before we get into all this, I just want to say a massive thank you to each and every one of you guys out there that support this channel. I don't say it often enough. I do notice there are people that turn up every single day, leave likes, leave comments, and it truly does mean the world to me. The cryptocurrency market and blockchain is something I'm very, very passionate about. Trading is something I'm passionate about, and investing, of course, is something I'm very, very passionate about. It has changed my life, and I believe it can do the same for you guys. And I just want to say a massive, massive thank you to each and every one of you that are out there supporting day in and day out. Again, from the bottom of my heart, it truly does mean the world to me, and a massive thank you. It's very, very much appreciated. So enough of the soppy nonsense. Let's get into it all, guys. We know what's happening right now with markets, okay? They basically have been readjusting, and Bitcoin really started to follow suit from February. 1st of February, you know, Bitcoin came down, the stock market came down, and the reason for this was because rates and where they're getting to was deemed to, you know, start of February, climb up. Dollar also follows this, and this is on the backdrop of sticky inflation, which of course is what's leading the Fed. And we're in this kind of very macro or central bank controlled liquidity crunch with interest rates. And there's actually some really interesting things coming out because there's some people betting on rates going to 6% in the US. Now, that is a scary world. Maybe that's what the Fed need to do to get inflation down. But the damage that would have on the financial system, even where we are right now, I think over a long enough period of time is completely unsustainable. We've already seen Yellen say we need to up the debt ceiling as a result of this. The kind of payments on yields or bonds and debt is just insane. And it's something that I don't think is going to go on for much longer. And I think the Fed right now are on this tightrope of causing something serious to break or letting inflation run a little bit harder for longer. And I think they're going to choose inflation harder for longer. I think they're going to stick to a 25 basis points in the coming month. Even if we get continuously sticky inflationary data. And the reason being is because they are already at a pretty high level for rates. And I think if they go much further than where they're currently at, you're going to see something seriously break. And this is all stuff that we have to watch. And I think actually going on to where I think we're at, with this head and shoulders pattern that we've gone into in a lot more detail. We did initially think this was the shoulder, but I would say it's probably more prominent that you're now forming the right shoulder given just how far this has pulled back. These levels that we've got here are the Fibonacci retracement tools. You can see we've interacted with one currently. The next one may be here. This is one that we really wouldn't want to see crossed at the 50. And then, of course, we wouldn't want to see this one breach because it gives us more sort of confidence that you're going lower and also danger of running that left shoulder. So with the Fed and everything coming in the coming month, or in the coming month being March, I think that if you get that 25 basis points, markets will rally on the back end of it. You'll see yields come down, you'll see the dollar come down. And this is really what we're looking for. I was actually looking at the stock market earlier, and the stock market actually doesn't look too bad at all. So one thing that we looked at that allowed us to get back into the markets was we were looking at the RSI and we were looking at divergences on the weekly. And we said looking at risk broadly, you've got a divergence here, bullish. Bitcoin had the same thing. The dollar had the adverse of this, it had bearish. Stablecoin dominance also had, this is an unchanged stable USDT dominance chart from the start of the year, guys. And we were looking at this and saying, okay, you're going to break this, and this is going to correlate with of course, Bitcoin getting a little bit of strength. And you can see that that's largely been the case. But to go back to the S&P, you could be actually just setting up for a really healthy retest here. So it's very, very common once you break out of what's been resistance for the S&P for a while now, that you do actually come back and retest it as support. And this essentially could set you up for the upside. Now, again, this is all going to relate on inflation, the Fed, what they're doing. Markets are playing this game of second guessing the Fed and what they're going to do. And ultimately, we've seen that this month. We've seen rates get implied to be going higher, and we see markets adjust in terms of where they're at as a result of this. And we are still potentially in this, are we in a bull market right now for the cryptocurrency market? The answer is no. A bull and bear market to me is a kind of more lengthy period of time, 6 months plus. And a bear market is really defined, or a downtrend is defined. If you look at Dow theory, it explains this very well, as a concession of lower lows and lower highs. With a bull market, you need to at least see that higher high and then a higher low before this takes place. And so far, we haven't really had that. We potentially had a higher low, but we need that higher high, higher low, and then we can start looking at maybe starting a bull market. People calling for a bull market at the moment. You've got no confirmation of that. You're just sort of guessing that maybe 6 months down the line, you can say, okay, that was the start of the bull market. Remember, we were very early on this rally, talking about it at the start of the year. So this is still what we're looking at. I think you're going to have to just weigh in everything. I think you get your right shoulder completion on the back end of the dollar coming down. So it's quite common that, the dollar could do something like this and then roll, taking all this liquidity out. That's something that absolutely could be on the table. Or it could form some sort of a double top here and roll. If you go above this, hold it, look for upside. But we're really looking on the dollar rolling, and I think this is largely going to correlate with the 2-year yields, which could be putting in some sort of a double top. So this is really what we're looking at. Remember, this is essentially a way to look at rates and rates going up. And, we need this top. This is something that we looked at the start of the year. We said this could be the top for the 2-year yields. You've now put in, you've not actually put in a high just yet. And if this is the top and this is going down, it means the Fed funds isn't too much behind it. So really what we're looking for is weakness in the 2-year yields, dollar to start selling off after a nice rally. That's going to allow the cryptocurrency market to essentially turn around and look for upside, along with the risk sort of asset sector. And the risk asset sector, like the S&P, for example, if you're going to get a bounce, you're going to get it here, right? You've already seen buyers come in. You've seen buyers come in here. It's not too much further away from seeing that upside. So I think we could be on to not such a bad week. Watch the dollar, watch everything. We've got lots of economic data ahead of us. US durable goods orders. This is all going to be looking at inflation. We've got the French CPI, US consumer confidence, Canada's GDP. Wednesday, we've got things like US oil inventories. Thursday's really the big one with the Eurozone CPI and the US initial jobless claims. And then we've got US ISM non-farm or sorry, PMI. So there's going to be lots of sort of data that's going to be used to sort of see how we're getting on in the fight against inflation. So just keep an eye on all that. You know, really, it's the weeks after this one where we're going to get a lot of stuff that's going to sort of move the markets. And certainly as people are looking towards the next rate hike, they are very much people are now looking at 50 instead of a 25. I think if we get that 25 markets do well, I think we get the 50. You know, things will readjust because we're already at 4.75. That takes us to 5.25. And then if they did, you know, another 50, and I can't see them getting to 6. And I think you know, we're coming to the end of this. But it's an ever-changing situation where we really need to watch what's going on. You've got to remember the Fed also talking tough at the moment are very much talking tough because it's almost a monetary policy in itself. You know, they're kind of forewarning and guiding markets and hoping that they can sort of talk them down, if that makes sense. This was an interesting article of Berkshire Hathaway, fourth quarter operations earnings fall 8%. Cash hoard swells to nearly $130 billion. So there's lots of cash on the sidelines. This is something we've highlighted previously. Again, we've got the week ahead. This was something also, before I love and leave you, that was very, very interesting, guys. I cannot be more confident on the fact that the cryptocurrency market is got so much further to go in terms of market capitalization. Some of the cryptos that are going to be winners in that could literally change your lives. It's already done it for me, and I think it can do the same for you guys. Coordinated global crypto policies, G20 key financial stability a priority. This is the Indian finance minister calls for a coordinated effort for building and understanding of macro financial implications, which could be used to build global crypto reform. So crypto still exists in this kind of unregulated manner. And we actually said what Gary Gensler's doing has bullish connotations to it because it shows that they're taking it seriously. And right now, the only thing stopping literally trillions of dollars in terms of institutions from getting in is regulations. Once we get that clarity, it's go time. And I think that clarity is coming a lot sooner than people think. It was largely and has been advanced with the likes of Sam Bankman-Fried, FTX, and also you're seeing a lot of programs get attacked at the moment, and that has everything to do with Gemini and Genesis. You know, it's kind of like, I'm not really on the side of Tyler Winklevoss of all this because did they really not know what Genesis was doing? I think they did, and I think they're just very much crying wolf. But crypto regulations are coming. This is from Secretary Yellen, calls for strong regulatory framework for crypto activities. So I don't think they're going to ban it. That's not what they're calling for. They're calling for regulating it. And ultimately, you'll see institutions enter the space. That's going to happen in the near future. You want to be in the crypto space before that happens because then you're going to get this wall of money that will enter and see everything continue to the upside. That could happen in the coming months, years, I believe. And it's really going to propel the cryptocurrency market to the upside. So this is really what we're watching. How far we go? Well, you've got your levels drawn out. Look for the dollar. Look for the US treasuries. Also, let's see how the stock market opens up. I'm going to see how the dollar opens up tonight. I will be doing a meeting with my Patreons. If you guys want to get on board with that, you can either wait till the start of the month. It's subscription billing, so it doesn't come out at the start of the month like most Patreons. It comes out from when you've paid. You've got a month until the next payment. So feel free to join the Patreon. Check the link in the description. On that note, guys, I'm going to love and leave you. If you've enjoyed the content, always a like is appreciated, so as a comment, and I'll see you all in the next YouTube video. Thanks a lot for watching, ladies and gents.